Hello. Owner deposits cash of $70,000 into the business. What will be the effect on the accounting equation? That accounting equation being, of course, assets, liabilities, and the equity. Whenever we think about any transaction, there's going to be at least two accounts that are affected. We have our accounts listed under the assets. These are types of assets: cash, accounts receivable, supplies. Types of liabilities, we only have accounts payable at this time. Types of owner's equity, we've got capital, which is an owner's equity section. And then we've got the income statement, including revenue and expenses, where we just have wages and utilities at this point. That is our accounting equation. So what are the two accounts that would be affected? I usually ask first, is cash affected? Because that will tell us a lot about what the other half will be. And in this case, we're going to say, yeah, cash is affected. So that's going to be 1/2 of the transaction. So what's the other side of the transaction? Well, who put the cash in there? The person who put the cash in there is the owner. And therefore, the owner's equity will be the other half. So cash is going to go up for the business because it's going to go down for the owner, up for the business. And then the capital account is going to go up. Capital account represents the amount of money that is owed to the owner. And therefore, it's going to go up as well because the company owes it back to the owner in the format of the accounting equation. So if we just take a look at that, we're going to say, well, assets then in general, in terms of our accounting equation, assets as a whole will go up because cash went up and it's on the assets section in green. What happens to liabilities over here in the orange? Assets equal liabilities. Liabilities stay the same. No effect on the liabilities. And what happens to the equity section? The equity section as a whole will go up because capital went up. Remember that the equity sections are a little bit tricky because it includes equity as well as revenue and expenses when we're talking about the accounting equation. And so keep that in mind as we go. We can see that we are in balance, meaning that total assets equal total liabilities plus owner's equity. That's our accounting equation. That's kind of like our balance sheet type of equation. We know that also net income not affected. That's a little bit trickier to see. You'll note that net income is blue, indicating that it's over here in the equity section. But net income only accounts for these accounts, not the capital accounts. So revenue, this is the income statement, revenue minus expenses. That's what's being calculated here, in this case, being not affected.